South Korea's economic situation is puzzling. Inflation is rising, but it's still below the central bank's target, and they've just cut interest rates for the second time in a row. It seems counterintuitive.
The Bank of Korea's move, it's driven by concerns beyond inflation. Their focus has shifted towards stimulating economic growth amidst slowing exports and uncertainties surrounding the new U.S. administration.
The November inflation report showed a 1.5% year-on-year increase, higher than October but still below the Bank of Korea's 2% target. This is the third month in a row that inflation has missed the target. What does this tell us about the strength of inflationary pressures?
The figures might seem subdued, but we need to consider the low base effect. This means the current inflation rate appears higher because it's being compared to a period of unusually low inflation in the past.
So the 1.5% increase may not accurately reflect the underlying inflationary trend.
That's correct. But there's another factor influencing inflation, the weakening Korean won. Its depreciation against the US dollar makes imported goods more expensive, which ultimately drives up consumer prices.
The Bank of Korea expects this to push inflation closer to their 2% target in the coming months. Given this, why did they cut interest rates, especially twice in a row?
The Bank of Korea is clearly prioritizing economic growth over controlling inflation right now. Their actions signal a concern about slowing export growth and the potential impact of the new U.S. administration's trade policies.
Why are exports slowing down, and what are the potential implications of the new U.S. administration?
Uncertainties surrounding the new U.S. administration and its potential trade policies have contributed to a decline in export growth. South Korea relies heavily on trade, and the U.S. is one of its largest trading partners.
What specific concerns are there regarding the new administration's policies?
There's concern that the new administration might adopt protectionist measures, potentially imposing tariffs or other trade barriers. Such actions could significantly impact South Korea's economy.
How would tariffs affect South Korean businesses and consumers?
Tariffs would make South Korean goods more expensive for U.S. consumers, potentially leading to a decline in demand and impacting South Korean exporters. This could further weaken the Korean won, creating a vicious cycle of economic pressures. South Korean consumers might also experience higher prices for imported goods from the U.S., adding to inflationary pressures.
The Bank of Korea's inflation forecast of 2%. It seems to rely on declining global oil prices and subdued domestic demand to counter the inflationary impact of the weaker won. How would declining global oil prices affect inflation in South Korea?
South Korea relies heavily on oil imports. Lower global oil prices would translate into reduced costs for businesses and consumers, leading to lower prices for transportation, energy, and a range of goods and services. This would mitigate inflationary pressures.
How would subdued domestic demand factor into the inflation equation?
Weak consumer demand discourages businesses from raising prices due to the fear of losing customers. This helps to contain inflation, even with factors like a weaker currency pushing prices upward.
Is the Bank of Korea essentially betting on lower oil prices and weak demand to offset the inflationary effects of the weaker won?
Their forecast does hinge on these factors, which are not entirely within their control. Global oil prices can be volatile, influenced by geopolitical and economic events. Domestic demand is also difficult to predict, affected by factors like consumer confidence and employment levels.
This suggests a high degree of uncertainty surrounding these forecasts.
Absolutely. Economic forecasting is not an exact science. Unforeseen events can always disrupt predictions.
We previously touched upon the potential impact of the new U.S. administration's trade policies on South Korea's economy. Can we delve deeper into this aspect?
As we mentioned, South Korea's reliance on trade, particularly with the U.S. as a major trading partner, makes it vulnerable to shifts in U.S. trade policy. Any changes could have significant repercussions for the South Korean economy.
Which specific changes in U.S. trade policy are causing concern?
The potential for a more protectionist stance from the new administration raises concerns. This could manifest in higher tariffs on imports from countries like South Korea.
How would such tariffs impact South Korean businesses and consumers?
Tariffs on South Korean goods would make them more expensive in the U.S. market, potentially reducing demand and harming South Korean exporters.
Are there other potential changes in U.S. trade policy beyond tariffs that could affect South Korea?
The new administration's interest in renegotiating existing trade agreements, including those with South Korea, is another area of concern. These renegotiations could lead to alterations in various trade aspects, such as intellectual property rights, market access, and investment roles.
How is South Korea likely to respond to this pressure to renegotiate trade agreements?
South Korea will likely strive to protect its interests while maintaining a positive relationship with the U.S.
What would such a balancing act entail?
They need to avoid damaging their trade relationship with their largest trading partner. While simultaneously safeguarding their economic interests, it's a delicate and crucial maneuver.
It seems like a lot of uncertainty and potential risks for South Korea.
Navigating the complexities of global trade and economic policy is always challenging. Especially for export-dependent economies like South Korea, the stakes are high.
We've covered a lot of ground today, from ocean data to international trade. It's clear that South Korea faces a really unique set of economic challenges.
Definitely. The convergence of domestic factors like slowing export growth and a weakening currency, coupled with external factors like uncertainty surrounding U.S. trade policy, it creates a complex and unpredictable environment for South Korea.
What can we expect to see in the coming months?
The Bank of Korea will likely maintain a vigilant stance, closely monitoring the situation and adjusting its monetary policy as needed. They'll be watching key indicators like inflation, consumer spending, and export performance.
What are the key factors that could influence the Bank of Korea's future decisions?
The trajectory of global oil prices is a major factor. If oil prices continue to decline, that could alleviate inflationary pressures. But a rebound in oil prices could complicate the Bank of Korea's efforts to manage inflation.
What other factors will they be considering?
Developments in U.S. trade policy will be closely watched. Any move towards protectionism could have negative effects on South Korea's export-oriented economy.
So it seems like the Bank of Korea is taking a wait-and-see approach.
They're gathering more information and assessing the potential impact of various factors before implementing any major policy changes. This cautious approach makes sense given the current circumstances.
What are some potential scenarios that could unfold in the coming months?
One scenario is a continued decline in global oil prices, subdued domestic demand, and a moderate approach to trade policy from the new U.S. administration. In this case, South Korea's economy could stabilize and inflation could remain relatively controlled.
And what about a less optimistic scenario?
A less favorable scenario could involve a rebound in oil prices, the adoption of protectionist trade policies by the U.S., and a slowdown in global economic growth. This would create a much more challenging environment for South Korea, with higher inflation, weaker economic growth, and increased financial market volatility.
So the range of possible outcomes is pretty wide, depending on how these different factors interact.
That's the nature of economic forecasting. It's more about assessing the probabilities of different scenarios and preparing for potential risks and opportunities, rather than trying to predict the future with absolute certainty.
It sounds like South Korea's economic future is very dependent on things outside of its control.
External factors definitely play a big role, but South Korea also has its own strengths and weaknesses that will influence its economic trajectory.
What are some of South Korea's key strengths?
South Korea has a highly educated workforce, a technologically advanced industrial base, and a strong export sector. These factors have contributed to its impressive economic growth over the past few decades.
And what about its weaknesses?
South Korea faces challenges such as a high level of household debt, an aging population, and a reliance on a few key export industries. These issues need to be addressed for sustained economic progress.
So South Korea has a mix of strengths and weaknesses that will shape its economic future.
Every economy does. Understanding these is crucial for navigating economic complexities.
Given all this complexity, what are the key takeaways for our listeners regarding South Korea's economic situation?
The most important thing to understand is that South Korea is facing a challenging economic environment with numerous headwinds, both domestically and internationally.
What else is important for our listeners to keep in mind?
The Bank of Korea is trying to balance economic growth and inflation management, and it's a delicate balancing act with no easy answers. Recognizing this is crucial for understanding their policy decisions.
Any final thoughts for our listeners as they follow this unfolding story?
Stay informed about the latest developments, and try to understand the potential risks and opportunities facing the South Korean economy.
This has been a very informative conversation. I appreciate you taking the time to break down these complex issues for us.
It was my pleasure.
Goodbye, and see you in the next video.
Goodbye, and see you in the next video.